Pankaj, first let's understand that how should one read into this week's reversal in some of the ranked mid-cap stocks? I'm using the word Humpty Dumpty because some of these stocks had become Humpty Dumpty and now they're seeing a great fall.
Yeah, good morning, Nikunj. I think we had a remarkable run in the last 18 months, and it's now on record that this is the third longest run without even a 10% correction. Almost we have crossed more than 250 days. So clearly some correction is needed in the market, and the last 3 months, the moves in many stocks makes us a little cautious that things may not be in the right order. Uh, Clearly, on one side, we are seeing frothy valuation in some quality names. And on the other side, the low quality companies which have not made a double digit ROE for a decade are also moving and trading at price to book of 3 times, 4 times. So clearly, markets are in a zone where they have clearly, forgotten what valuation stands for, and that I think is some bit of a concern. Let me share a couple of data points which will probably make things clearer where we are standing today. So if you look at NSE 500 companies and just remove the financials out of it, uh, in that universe, 20% of the universe is trading at price to sales of greater than 10. And the contribution of those companies in daily turnover is more than 20%. And mind you, such kind of excesses we saw in 2007-8 also, when there was frothy valuations in certain pockets. And clearly that is again reflecting this time around. The second data which I wanted to share with you to give some sense on valuation is that, again, if you look at the entire 90% of the investable universe in India, uh, and you do a rolling 5 year, stock returns, about 70% of the universe has doubled over the last 5 years. And clearly, that's again reflective of the fact that the best of the market breadth is behind us. And normally at these points, markets tend to kind of peak off on valuation side. So I think we need to be a little careful right now, need to be a little cautious. And our sense is that over the last 10, 11 months, not only in India, in Asia and globally, the earnings momentum which helped stock prices or the earnings upgrade cycle which helped the stock prices probably are showing signs that it will pause over the next few quarters. And one of the main reasons is the cost inflation side. Companies are flagging off that there are margin pressures. And our sense is that in the third and the fourth quarter, you will see further margin pressures as high cost inventory of raw materials starts to get consumed in. And there's a limitation of what you can pass on to the end consumer. The second is the supply bottlenecks. Uh, Across companies, we are seeing that logistics have become a major challenge. Supply bottlenecks are a major challenge, which will weigh on either the top line or the margins. So we believe that the early indications suggest that there could be some pause on the earning upgrade cycle, which we saw for almost 4 quarters now. And I think there where markets will probably, take a fresh look at the valuations, fresh look at the growth over the next few quarters. And I think that's very healthy from a market perspective. Don't forget, in the previous bull market in 2003 to 7, we had various mini corrections of 10%. And if my memory serves me right, we had almost 3 times 30% correction as well. So these are part and parcel of any bull market. Over a medium term, we are extremely positive that the earnings cycle compounding or the earnings growth of which is coming in corporate India after a long time seems to be quite robust. The investment cycles are showing signs of pickup, which has not happened for almost a decade now. So these are medium-term, positives. But in the near term, I think valuations have run ahead, and we need to be careful about that.
Okay. So let's decode the three factors you flagged off, and I will decode all the factors one by one. Is it a good idea to compare historical valuations and assume that what has happened in the past will happen in future because the scenarios were different, the debt levels were different, the Reserve Bank of India or central bank tolerance towards inflation was different, productivity levels were different, China was in a different state. Can we look at historical benchmark and say पहले ही हुआ था तो इस बार फिर से होगा?
So, Nikunj, I always believe, and I'm a great believer in history, that history may not repeat itself, but history may rhyme. And if you recall, in April, May of last year, when everybody was negative, we came on records and said that the cycle resembles 2001 to 2003. We didn't even say 2003 to 2007 because there was a sharp decline post 2001, 9/11. And from there on, the broader market did extremely well for the next 2, 3 years before the actual bull market took off. And many stocks we saw multiplying very fast. And that laid the seeds for the next big upturn in the economy. I think we saw those similarities last year. But don't forget that valuation is something which you cannot ignore for a long period of time. If 20% of the NSE 500 companies, ex financials, are trading at price to sales, forget price to earnings, price to sales of more than 10x, these are signs which tell you that there is some froth in certain pockets of the market. So I'm not saying that market is crashing or collapsing, but intermediate correction, is it possible? Answer is yes. Uh, for 18 months, almost no 10% correction we have seen, which will create excesses in its own way. So history may not repeat, but history always rhymes. So I think there are enough cues from the past we should always take and don't ignore. Always it looks like this time is different, but trust me, we have seen enough cycles to suggest that valuation is something which is an important parameter and you should not ignore it.
Pankaj, today for a change, we've changed roles. Fund managers are programmed to be bullish, and television commentators are programmed to be bearish. But it's the other way around, today at least for a change. So I'm quite liking our conversation. So let's take the conversation forward with the second point which you flagged off, which is high cost pressures and demand supply constraints. While high cost pressures are going to be impacting companies and profitability, but there is a new profit pool which is also getting created in steel companies, cement companies, metal companies, and that in a sense will take aggregate picture very different.
Yeah, you're absolutely right. So in an inflationary situation, what happens? The upstream and the producers actually benefit, and the spread companies and the downstream and the actual consumer of those commodities actually suffer. In India, if you look at large part of our basket is mostly the second part, not the first part. And obviously, earnings expectation is built into that basket, that there will be a strong earnings growth on the producer side, which will negate the pressure on the downstream side. So that's, I think, built into the expectation. What markets like is incremental basis. From here on, for the next 2 quarters, are we seeing an earnings upgrade cycle, which happened for the last 4 quarters? My hunch is the probability is quite low. And the reason I'm saying so is that if you remember last year, from the third and the fourth quarters, you saw very strong margins by corporate India. You had low cost inventory, low cost of raw materials, low feedstock. Salary cut had fully not reversed. Traveling had still not started. Marketing cost was low. Now look at in December and March quarter when we stand, uh, all these things which aided to the margins of corporate India will probably work against us. And probably there will be base which will not be so low. So my sense is, hunch is that margin pressures on a year-on-year basis comparisons will start looking quite severe. The second point is that a part of top line growth will negate your margin pressure, but still, I think commodity cost, the way it has gone up, is something which we need to be a little worried about. Few of the cement companies reported their numbers, and if you look at their con call, they are clearly saying that 500 rupees per ton of incremental cost on power and fuel will flow into the third quarter, and equal amount can flow into the fourth quarter. So I think with that kind of increase, you need to pass at least 35 to 40 rupees per bag on the cement pricing to the end consumer. And I think that's the story across the board. So clearly, as we stand today, and things might change over the next 2 months, we never know. But the pipeline inventory, which people are booking now at high cost, will get consumed over December, January, February, March. And that, if costs are not passed on to the end consumer, will weigh on the margins, is my sense.
Old notes the last time we had you on the channel, and I would like to revisit them. I will just come back to that, but breaking news at this moment. Nikunj, is that proud moment we've been waiting for. It is now official. I've just been informed by our producer and director that we've hit 1 billion jabs, 100 crore COVID-19 vaccines have been administered. It was expected to happen today before 10:30 a.m. and it's played according to script. There are celebrations, of course, that have been planned. And Nikunj, like you were pointing out, this is nothing short of a miracle.
You know, it's not a happy, it's not a proud, but this is like a moment of glory for us as a country, and a very proud moment when we look at how quickly this milestone has been reached. It's taken less than 300 days because the vaccination drive started on 16th of Jan, and from 16th of Jan today, end of October, 100 crore vaccine shots have been administered. Something which looked almost impossible. Mathematical models were not even able to justify what the Indian administration has managed to achieve. Despite serious criticism and naysayers who kept on insisting that ye to hoga hi nahi, it is almost impossible, we've made the word impossible look very easy. Now, economically speaking, 100 crore vaccine shots, well, what it means? That means 68% of the adult population of India, about 70% of adult population of India has got one shot. Nearly 28% of the adult population of India has got two shots. Just a grim reminder that the second wave had devastating impact on India. And that time the only way out was to vaccinate. And the vaccination process, the ease with it has been rolled out. Now remember, we are looking at vaccinating a country like India. And it's a complex country with not world-class infrastructure, and yet this achievement has been done. This has been done without leakage. This has been done with proper checks and balances. This had been done where data has been collated, and this has been done with a very unique digitization scheme which in a sense has been rolled out. So Nentara, apart from the fact that I wouldn't say it's a victory over COVID, but the fact that the vaccination drive has managed to contain the spread of corona, the chances of a third wave now getting diminished with each passing day, there are 2-3 things which stand out for me. One, our ability to produce vaccine. We've emerged as the vaccine capital of the world because we are looking at scale and size. Then the government's ability to bring everything together in terms of a digital infrastructure. And all of us have had our vaccine shots, and we know that how stringent and strict and how meticulous the entire process has been. There is no farji bada. You have to go through the proper channel and the proper process. And third, managing logistics, whether it was syringe, needle, doctor, nurses, hospitals, vaccination centers, everything came connected in a very beautiful manner. So this, I think, in a sense is it's a moment of glory. Let me put it this way, Nantara.
Okay, so that's of course, like Nikunj was saying, nothing to be happy about, but it's nothing short of a miracle. We're watching out for that very closely. In about 40 minutes from now, Prime Minister Narendra Modi is supposed to talk about this. Kailash Kher's song is going to be unveiled at Red Fort at 12:30. You're going to have an audiovisual movie also being shown at the Red Fort. SpiceJet is also planning a special flight. Will be up to date with all of that. The next step, of course, is to vaccinate children, and that also the government has said it has a roadmap for. Back to the markets, and the mid-cap reversal is what we were discussing with Pankaj Tibrewal, with Nikunj saying that for once The guest is sounding more bearish. So Pankaj, back to that. I was just saying that, when I knew you were coming today, I was going through the last time you were on the channel and some of the points that you had raised, where I said, and you admitted that the biggest challenge for you was figuring out the terminal value in stocks. So now when you've not had any of those mini 10% corrections, where are you seeing all of this? You had once said thermal energy will do well, but terminal value will go down. Metals, it is challenging. And you had said that the best way to play the capex cycle is through banks. Is it still that?
Yeah, I mean, some of the themes, Nayantara, which we believe are powerful themes from a next 3 to 5 year perspective. The first one is the revival of industrial capex and manufacturing. And clearly, we believe that uh, there are early indications that both government and private sector capex is likely to pick up in the coming quarters and months. And we believe that this last decade, we saw that this sector has not done anything and they are not very expensive also on the valuation side. And we believe that the way we were bullish on chemicals 3, 4 years back, I think the same positivity is there on industrials and manufacturing as a theme. Um, the China Plus One and the entire PLI has started flowing into the economy, and it's no longer in theory. I think it's we when we speak to companies, every company is talking about incremental orders coming from global suppliers, which were mostly dependent on China. So I think that's one space where we believe that incrementally it's a slightly medium to long term trend. The second, I think, is the financials. I think private sector financials, though may have underperformed the market of late, but I think if you look at a slightly longer term basis over a decade, 2 decade, I think private sector financials have still headroom for growth. They are gaining market share. All the other metrics are looking very good. Credit cost seems to be coming down now. And can they compound their earnings at 20-25% going forward? Answer is yes. So that's one space which is again reasonable on valuation. The third theme, Nayantara, is that we are believing that strong will become stronger, big will become bigger. And across the board, we are backing the leaders of the sectors, the top three, top four guys. And we are seeing that the formalization of economy which started post-demand has actually gathered pace post-COVID. And the leaders are gaining market share at the expense of the smaller guys or the tail end of the sector. And I think that's the third theme where we are positive on. And the fourth theme, which we believe is the real estate revival theme. We are not so, great admirers of the real estate developers because they don't generate the return on equity over longer periods of time. But in order to ride this revival in the residential real estate, we are quite positive on the home improvement space. Very well acknowledging the fact that next couple of quarters could be, we may see pressure on margins, but from a 3 to 5 year perspective, we believe that the demand momentum revival could be very strong. So those are the main four themes. And along with that, export, which will include IT and pharma along with it. So I think these are some themes which are part of our portfolios and we believe could be powerful themes over the next 3 to 5 years.
Okay, those are the big themes that you're seeing Kotak AMC bet on, led by Pankaj Tibrewal. It's always a pleasure talking to you. Thank you so much for joining us today. We have to take a short commercial break. We haven't done that in a while. Stay tuned. We'll be back in 2 minutes.